Hello everyone, this is Heather and this is going to be a quick introduction to our options market summary as part of our crash course. So this is a really powerful dashboard, and at Tradytics we use it almost on daily basis to find really good plays. When I'm going through some of these widgets, I'll talk about how I personally find plays based on these widgets, but there are always other ways that you can find your own plays. But I'll go over these widgets quickly, and then I'll discuss one or two tips for each widget that I personally use to find really good plays. So as usual with other tools, you can, if you want to see historical data, you can just go to this calendar and you can choose any date you want. So right on the top, we have SPY and QQ total premiums for calls and puts. These are there to just show you how much money is being spent on SPY and QQ calls and puts. What you'll see here is most often in a bullish market, you'll see more put premiums than call premiums, and that doesn't mean that markets are going to get bearish. That just means that in a bullish market, since these indices are used quite a lot for hedging purposes, in a bullish market, a lot of the times people are just using these indices to hedge their positions. And since, let's say, we are in a bullish market, for hedging you'll have to buy puts. So that's why you might see these put premiums be more than call premium. Sometimes you can just skip that. If there is a very significant difference between call and put premiums, then that might be something that you want to look into. Next up, we have the top bullish and bearish flow. So this looks at the net premiums for calls and puts. So the net premiums here would be the call spot minus the put spot, and the difference between their premiums would be the net premiums. So this widget sorts based on the net premiums, and then you can see the most bullish and the most bearish symbols. We can see that MS today was the most bearish one, where $122 million were spent on calls and only about $0.08 million were spent on puts. So that's a very large difference of about $122.37 million, and that's why this is at the top. Then we have Apple, we have Google, we have Facebook, we have Amazon. Facebook and Apple had earnings today as well. And then on the lower side, we have SPY, we have IWM, we have EM. So these, the symbols that you're seeing here, these are really good candidates to keep in your watch list or to make directional plays for. So let's see you are seeing bullish flow for Apple, Google, Facebook, and Amazon and Tesla. You might want to go bullish here. If some of your other signals, we'll talk about what those signals are. If some of your other signals are telling you that Apple or Facebook or Tesla have a bullish expectation in the next few days. So this is just going to provide you some additional information on top of what you currently have, and if this is aligned with what you have in your mind for a play, then that just provides you more confidence. So this is why we use this widget. We either want to generate trade ideas based on it, or we want to just add confidence in our existing plays. Then we have 4 widgets for highest call and put volume change, highest call and put premiums change. These widgets show you the stocks that have the highest change in their calls and puts volume and premium. So this bar is the volume today, and this bar is the premiums today, and then these grayish bars are the average volume and premium in the last 5 days. So you can see that today Facebook had a lot more volume than the last 5 days, and Apple had a lot more premiums than the last 5 days. And on the flip side, Facebook also had a lot more puts volume today, and Facebook had also had a lot more puts premiums today. And then we have all these other symbols. So the way we want to use this is we want to find symbols that have a very large volume or premium change, and then we want to either day trade them or swing trade them. Personally, I found out that day trading these really high volume change stocks really work well. In order to find really good swing trading setups, we need to go to these next two: highest call open interest change and highest put open interest change. So open interest is the number of open contracts, and if the volume is high for a symbol in terms of options, then that might mean that the contracts were opened and sold the same day. But open interest is the number of open contracts. So let's say open interest, the volume is really high. It can totally be the case that open interest stays low because volume is both buying and selling. People can buy and close their contracts, but that would not increase open interest because open interest is the number of open contracts. So if we are swing trading, we always want the open interest to be really high because that tells us that a lot of people have their contracts open for this particular stock. And especially let's say the stock is at 100 and we see so much flow on about 125 or 150 strikes, and the open interest on those calls is also extremely high, then that's a very strong bullish signal because many people have their contracts open for 125 and 150 strikes. That's a bullish signal because people are expecting the price to move towards 125 and 50. Similarly, if there are more puts and the puts open interest is very high, then that might be a bearish signal. So volume and premiums should mostly be used for day trading, but open interest is a really useful tool to find excellent swing trading opportunities. We'll talk about open interest more in some of our later videos when we are covering some of the other tools. Then we have the largest flow. So this just shows you single orders with the largest premiums. If you hover over these circles, you can see that a Google call was purchased today for about $15 million. Then we have the sector flow and for both premiums and volume. And this just shows you how well some of the sectors are doing and how bad the other ones are doing. We can see that financial sector had a slightly negative average net volume today, and every other sector was positive today. The next three widgets might probably be the best widgets that you can find on the platform if you are a lazy person. So I have to add the condition on being lazy, because if you are not lazy, then there's so much else in the platform that you can use. But if you're lazy and you just want some really good trade ideas, then these three widgets are going to provide you some of the best trade ideas that you can possibly find anywhere. Let me explain what these widgets are doing. So the high volume cheap please this is a table that shows you the contracts that are cheapest in price but that have the highest volume. So you can see that we had HYG put, and the volume was about 74k. Then we have Apple calls today, and the volume was about 30k. And you can see that the bid ask, the contract price, is really low. It's just $54, and for this it's just $108. So that's a really low price. Now the reason we have this table is because oftentimes what happens is if there is a cheap contract and there is a very large amount of volume for that contract, the price actually moves toward that direction, because we hypothesize that if on a cheap contract there is a lot of volume, then maybe there are some people who know things that we don't know, and they're spending all that money on those cheap contracts. And the reason we are trying to look for cheap contracts is because these cheap contracts are far out of the money. So there is a high probability that the price won't reach the strike prices of these cheap contracts. But if you're still seeing so much volume, then that tells us that something is fishy. There is a very low probability that the price might reach towards that strike, but still people are spending so much money. So that's a very strong signal that maybe someone knows something that we don't, and we should just follow them. And that's where this whole idea of trying to follow smart money comes in. And that's what we are trying to do with options. We're just trying to look for where smart money is being spent, and we are trying to follow it. So similarly, if you are interested in long-term contracts, then this widget shows you long-term and very high volume contracts. So you can see for an EPD, we have a 2023 contract, and that had a really high volume today of about 28k. Then we have the most OTM strikes, most out of the money strikes. These are again strikes that are far out of the money, where the strike price is far off from the stock price, but the volume is really high. So these are mostly, I think, in basic terms, what these two widgets are doing. They are just trying to flag for anomalous contracts that are being bought, and we can just look at those contracts, and if they make sense, then we can buy them. One of our users at Tradytics has about an 80% success rate with just these two widgets, and they are pretty rich based on just following some contracts in these two widgets. So what they do is they just look at these contracts. They then go and look at the price section, and if both of these things are making sense to them, then they buy exactly these contracts. And usually in a few days to weeks, these contracts pan out really well. So just keep that in mind. And again, if you're really lazy and you don't want to spend time anywhere else, just look at these contracts every day. These are updated every 10 minutes during market hours. So just take a look at these every day and see if you can find a good trade idea from here. Then the last table is a really extensive table on what's happening in the market in terms of the options flow. It has a bunch of columns that I won't go into the details for. You can just hover over these question mark icons to see what these columns are. One column that I'll talk about is the delta premiums. So this is the total premiums on all calls bought and sold and all puts bought and sold. And if this value is positive, that means that more calls were bought, less calls were sold, more puts were sold, and less puts were bought. You can take some time to sort of wrap your mind around this calculation, but basically if the value is positive, then the flow is bullish, and if the value is negative, then the flow is bearish. And if you just click on this delta premiums column, what you can see is it sorts the entire table based on this column. So what I do every day is I go through this table and I click on the delta premiums column, and I just pick the top 10 or top 20 stocks that are most bearish and the top 20 stocks that are most bearish, and those are my 40 trade ideas for the next day or for the next week. And so that's and since these are really directional plays and the delta premiums are really either highly negative or highly positive, that means, or at least we are assuming, that smart money is again either highly bullish on this stock or highly bearish, and that's what we are trying to follow here. So those, let's say 10 to 20 to about 40 stocks become our trade ideas, and then we can dive into some of the other tools that we'll talk about later on to see if we can find any confluence, and if we have more than one confluence factors, and then we build some more confidence for our plays, and then we can go into those plays. So that's it for this options market dashboard. One thing that I want to talk about before I end this video is that this is a really good dashboard to find out potential plays. But once you find out some potential plays, you should still look into some of the other tools, or you should at least do your own research and due diligence to see if the play makes sense to you as well. Because options can sometimes be used as hedging. Options can sometimes be used as hedges, and that can sometimes cause some confusion, because if a contract was used as a hedge, we don't really know if it was a hedge or a directional play. So sometimes that can introduce some noise in our signals. So just keep that thing in your mind. Other than that, this is a really powerful dashboard and you should very regularly use it. So that was it for this video. I'll see you guys in the next video. Thank you.